After understanding why we need to do adjusting entries, we will look at the types of adjusting entries. There are two major types of adjusting entries. One is called deferrals and one is called accruals. The difference between the two is in terms of when do the cash occur, okay, or the relative position between cash and the recognition of expense and revenue. Okay, so in deferrals, cash happens before the revenue is recognized or expenses is recognized. In accruals, revenue or expenses happens before the cash transaction. Okay, so for example, we can now divide deferrals into two categories and accruals between two categories as well. One will be regarding the revenue and one will be regarding the expenses. Similarly, for accruals, we can divide into revenue and expenses. Okay, so in deferrals, like I said before, deferral is when cash happens before the expense or revenue. Okay, in terms of expense, it says here that the deferral is when expenses paid in cash before they are used or consumed. For example, let's say we buy or we purchase, we pay for rent. Okay, sometimes people pay rent before the actual renting of the place. Okay, when we want to rent pay our rent, maybe you stay at college. Okay, you stay at your college for 3 years, but then you pay every semester or for every 4 months or 6 months, but you pay at the beginning of the semester. Okay, you enter UKM in September. You pay your rent for September, but not only for September, you pay your rent all the way until August next year. So you pay early, but then you have not actually consumed it. Okay, you pay for 11 months or 12 months of rent, but you are still in the first month. Okay, so you pay in cash before you actually consume all you have paid. Okay. That is an example of prepaid expenses which fall under deferrals. The other one is unearned revenue, cash received before services are performed. Sometimes you give out services to your customer, but you require a deposit. Okay, your customer sends a computer to you for repair, but then you ask for some deposit. You say that you estimate that the repair cost will be 200 ringgit, but then you ask the customer, can you pay some deposit? Maybe 50 ringgit deposit. So your customer pays you 50 ringgit deposit. But have you done any work on the computer? No. So you cannot recognize a revenue at the time that you receive the 50 ringgit deposit from your customer. So that 50 ringgit is called unearned revenues. You receive the cash, but you have not rendered the service. So that is a deferral that you need to do some adjusting entry. On the other hand, we also have accruals. Accruals is when the revenue, the service have been rendered. You have done the revenue activity, or you have incurred your expenses, but you have not paid in cash. So, for example, revenue for services performed but not yet received in cash or recorded. So, for example, when you receive a computer from your customer that asks you to make some repair to your to the computer, you repair the computer of the customer in May. You send the computer back to the customer in May, but then the customer has not paid it in May but paid it in June. So this is called accrued revenue. You have done the revenue activity, but then you have not received the cash for that revenue activity. And the other one is accrued expenses, where expenses incurred but not yet paid in cash or recorded. So a very simple example is bills. Okay, so you have consumed electricity in January. You receive your electricity bill in 5th of February. You only pay your bill in 20th of February. So you need to do the adjustment because you have actually incurred the expense in January, although you only pay it in February. So that is an example of accrued expense. Okay. All right. So to do the adjusting entries, we need to look at the trial balance. It says here that each account is analyzed to determine whether it is complete or up to date. So we have at the end of our accounting period, or either it is in month or in quarterly or yearly, we need to look at our trial balance and see whether the trial balance is complete and up to date. It takes into account all the deferrals and all the accruals. Okay,